Good morning. All right, so are we at the ultimate destination or is it just a short term rest here? Well, we really don't know yet, but the buyers blinked yesterday. They've blinked before and they've come back with a vengeance. So we're not counting them out. But markets churned for a good long time yesterday afternoon up at the high, and then sellers just decided hit the bid, and things came in pretty hard. And that gap up surely did not help. So we got a topping tail within an uptrend. So the benefit of the doubt does go to the trend. Right? By no means does one candle end a trend. We talked about, since last week, the acceleration, the increase in momentum, creating a void. So this does not come as a surprise that markets should rest here a little bit or pull back. Just like over here, when markets run and momentum picks up and creates a void below, markets pull back. It's normal. Why we trade and buy pullbacks, retracements. They also correct sideways, and we buy breakouts. Now, after a momentum run like this, we're going to need decent length. I wish I could tell you definitely how long the length would be, but this is where bar by bar analysis comes in, to where if we should actually see at the end of the day a topping tail ignored, maybe it dips down, a 180 bullish reversal, a bottoming tail, and so on. It's part of what we're going to be talking about today in MT Live, bar by bar analysis. So that can be used for analysis of whatever you're looking at. It also is used for management of positions, to be objective about what you're looking at. So we'll see how this unfolds. As mentioned yesterday, the internals did reach an extreme together. It was something like what I'd call a peekaboo extreme. So maybe this goes up further. These things rarely ever pick the high day. Extremely rare. So we are not counting out buyers, and by no means are we calling a top to this market. But we got a decent reversal day yesterday, and you can see the difference from the gap up. And that's what kind of put the odds in the favor of a pullback was, the momentum run up and then the gap higher. And then, after several hours of going sideways up there, I mean, longs have to say, okay, enough's enough. Let's just step aside and see what happens. And the prices pulled back deeply into the prior day's range. Okay, so we'll see where it goes from here. It was at resistance. It all makes sense. One of the themes I've been talking about is, the end of the month, last month, the beginning of this month, bullish. Now we come into the middle of the month and things historically change. So again, we have internals. We have the S&P up at the prior all-time high. I kind of thought it could push through it. Maybe it still does yet to make a new all-time high, and then, come back in a little bit, kind of, get the last of the holdouts in there to just get the bull trap in place. So, we'll see how it unfolds. It was a pretty sharp sell-off yesterday, intraday. Just kind of was like drop the rock off the roof, and it just came all the way back down to, it sliced through this support, came down to the next support. And so when you have multiple support levels together, we just read that as a stronger reference point of price support. So, as we look at one pivot low, and I say, well, how strong could it be? Well, there's often going to be buyers stepping up at one pivot low. But when you have three pivot lows in one place, we just read it as a stronger reference point of price support. Since the more buyers interacted at this level and held this, this price point, it's really just common sense. All of the indicators and trend lines and fib lines and all of that mumbo jumbo is what confuses the majorities into thinking, is it support? Is it not support? How strong is the support? and all of that BS. Yeah, you got a lot of PHs or PLs at the same level. So you just look at that as saying, well, you know what, it should be a stronger reference point, right? It's not brain surgery, it's just common sense. But a lot of common sense is someone just pointing out to you, look at this. Doesn't that make sense? And you go, yeah. So when you remove all the garbage from the chart, you know, all of the stuff that they put you on here that you can line up and a whole lot more, things begin to clear up. So short summary, topping tail at resistance in an uptrend, a little extended, likely to correct a bit. Qs have been lagging. Right? Everybody knows about rotation, bringing up the rear, as we call it, playing catch up. You know, the junk starts coming up. And so, you know, you had this little breakout failure there, pull back to the 20, minor support. You know, coming off of the low here a little bit. We'll see what it does. If the market does continue to correct here a bit, and I think it's likely it will, maybe eventually a pullback to where these two pivot lows are. It makes sense to me. Right? All right, let's SPX. I got. So obviously reversal, likelihood of taking out yesterday's high, less likely. It's the first day after a run up. So, you know, up above that level, let's go to SPX. So the high there, yesterday's high, 33.81, right? That's yesterday's high and low. That's the prior day's high and low. And you see how it came straight down. So this concept of a price void works both ways. When prices fall off the roof, they create voids above, which opens up the possibility of steep retracements back up again. So our factory work says when we get a wide range bar, a momentum move like this where we have essentially nothing to the left, since, you know, this area here was traded above and below, right? The concept from MTS, we just kind of come up with a subjective reference point to just say, look, typically halfway point, but in between the halfway point of the red bar, weak markets, weak stocks stay in the bottom half. They just do. They chop around, and this is what sets up what we call a 1, 2, 3 continuation pattern. But so intraday, we'd be looking for, well, it either goes sideways down here, which would be more bearish, of course, or it retraces back up around the halfway or so and forms a reversal, maybe a double top, whatever the pattern it's going to form. Right? We don't know that. Bar by bar will tell us as it unfolds. So as long as it stays right, in the lower half, we say it's continuing to be bearish. So as far as SPX goes, am I comfortable above 33.60 or around 33.60? No. If I can get above that, right, McGraw is telling me 33.95. Well, that would be, I think, kind of a no-brainer. If we could get that, if there's premium there. But, you know, we call it how close do you want to get to the danger zone? So as I said, there's no resistance here. It has to be created. So the further we can get away from this area and this premium, the better. Right? Now, Alex is telling me ES is already above 50%, which kind of leads it to that's where sellers are likely to come in. All right, so here it is here. And you see there's the topping tail that formed on the hourly chart, and the move up has created a void below. So now we'll see. The battle will now begin. And so we'll see what happens in this area right here. But you can see where it's stalled. You know, we look beyond to the left there. We see what we call minor resistance. So now, again, we just wait and see how it unfolds to see what patterns form. in a smaller time frame. That's the method, right? So we see voids above, we see voids below. Which way is it going to go? I'm not sure right now. Right? That was a pretty nasty reversal yesterday. So I'm going to wait a little bit and see what develops here. 3310, 3300, no brainer. Well, we've got this gap down here. So our next reference point of pivots is around 3320. So we'd probably have to sweat a little if it goes down. I don't know. Now it's up here. Give or take, it's up here. It could be okay. You know, McGraw, I'm on the side of taking less for the sure thing. But you are McGraw. So you've got the unfilled gap, which will come into play there in this minor support. So it could be fine. If it falls down there fast, I'd be more inclined to do that trade. Actually, if it fell down there fast, I would then go lower because, you know, odds of it continuing to go lower at that point are much smaller. Yeah, I'm looking, you know, 0 days to, yeah. So we'll see how it unfolds. All right, let's continue so I don't spend too much time. Give Dan the review. So YM, similar story, retracing back up again, topping tail, uptrend, blah, 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 all the same thing. Russell, similar story. It's got room to go higher. It's not at resistance like the S&Ps. So again, we got a similar pattern on the hourly, and we'll see how that shapes up here. We got a bottoming tail bar, so that's a good sign for the buyers, the bulls, that they bought the dip with nothing to the left. You see it over here, a little congestion. So we've got a trading range going on there. So we stand aside, you know, from the long point of view, I like the bullish wide range bar. So the idea of a bearish wide range bar and staying in the bottom half, it works the same way intraday. This bullish wide range bar, can it stay in the upper half? And if it does that, I got to consider the long side early in the morning here. And could that possibly push up? It sure could. And it could become a double top and crater again. So, look, we're open to all possibilities, especially as intraday traders, to see what shapes up here. You have to be. Otherwise, you're going to, you know, obviously have a painful experience. You're not willing to change your opinion. Bonds coming in hard. And simply we look to the left. We do the same thing. So there's congestion there. Odds are they continue to come down. And oil, sideways, chopping around. And gold got whacked yesterday. And big pullback and continued lower, getting a reversal here. So now, you know, the longer time frames are still bullish, right? You got a big nasty red bar there, incomplete for the week so far, but I mean, wide range bar monthly, little extended there. It's due for a little bit of a rest. I don't think this is over, but and we'll just see how this all unfolds at this point. How much does it actually correct? Silver got whacked too. A vertical drop. And so this is our factory work. If this is, you know, this isn't an uptrend. So, you know, that gets a big plus. Halfway mark, I'm just eyeballing it. I'm not getting out my protractor and measuring stick and all that. So if it stays below here, that's going to be bearish confirmation of the move. And so we'll just see. It's on support here. We'll see how much it can come back. And transports, a bit extended. They gapped up. I mean, excuse me. You know, in the room there, you guys know, you know, I had shorted YM because of the size of the gap later in the day. It seemed like a no-brainer to me that it would come down, and it did. And it's great when they fall like a rock like that because just, you know, you don't have to think much. It just keeps falling. So anyway, this filled the gap here. I don't really know what it's doing here pre-market. I guess it's up a little bit. But anyway, look to the left. It's at resistance, a gap up into resistance. Come on. After a run like that, it's going to get sold. So now we'll just see how much it corrects from there. Right? Yeah. All righty. So, Dan, I'll post a couple of things that are being asked on YouTube for you to review. I know, Cliff, it's up 300 points. Big deal. Anything. So what I'm saying is, just because something is up 300 points or something's up 20 points or whatever it is, where is it within the context of the existing chart? So if it was down 300 points and on support, okay, we'd be looking at that as an opportunity. Whereas this is up 300 points. Maybe it can go higher, but look, this thing could suck in buyers in the first 5 minutes and come right back in again. And there's a void below. So up 300 points, down 300 points. Where is it in multiple time frames? What do we do with it? And it's just a number. All yours, Dan.
All right, thanks. Good morning. Yeah, Debbie was the one yesterday into the close. She says, watch, we're up tomorrow. And I said, I don't know. Sure. I was looking for a bounce to short into today because of the waterfall. All right, T-Doc. So JR is asking T-Doc for a bear call credit spread. It's too far. It's too, you missed your ideal entry. Your ideal entry for a call spread was this bearish gap under the green bar, 30-minute low. And then you do out of the money call spread. Now it's just way too, we want to do them closer to resistance for the call spreads, closer to support for the put spreads. Bob's asking about Microsoft. You know, 3 bars down. Yeah, momentum is definitely down. Bearish 15-minute chart, it's gapping up here a little bit. I don't know. It just feels like we're pushing it. It could turn into a day trade if the market wants to keep going. But I don't see anything really compelling for a swing. Maybe day trade, like I said. But Qs were weaker. I don't know. We'll see. I need to, probably wait 15, 30 minutes and see if we're going to go up or down. Overstocks in my gap list here. We had a bear call credit spread that we covered half yesterday morning into weakness, and then we stopped out of half, break even. Now it's gapping under yesterday's low. Let's keep an eye on this to do another bear call credit spread. I was short the naked 165. It's way the heck higher. I mean, look at this. Look at that, Craig. What do you think the odds of this going to 160 are in 10 days? Extremely low.
Well, Dan, remember Tesla. I agree with you. But remember Tesla when it was at 100 and we said, how much higher can this thing go? And it went to 300.
No, Tilray.
Tilray. Yeah. Tilray.
Well, we got to see we'll see. We got to see what the pattern was when we said that. So here's 100. So yes, it was still vertical, but see in this bar, it had no reversal yet.
Yeah.
So that's the only difference there.
I'm just saying it's incredible how far some things can go. It's
absolutely
amazing.
Tilray looks like a short now under yesterday's low, because then it would be negating today's gap up. I'm talking about Tilray. Sure, yeah, good short that yesterday's low. Tesla, it just cracks me up. They do a 5-for-1 split and it gaps up 8%. Just everybody knows, a gap or an inverse split, they have absolutely zero to do with fundamentals. And so it's just another stupid example of how people are just programmed. I don't know how many billions that translates to. I don't know Tesla's market cap, but to be up 8%, um, up 8% on a stock split, that seems pretty silly to me. Which means, I would consider day trade short and or bear call credit spread for Friday. Play, this was on my list 2 days ago as a breakout in the beat up leisure stock. It's gapping resistance and it's, short-term extended. The restaurants, the airlines, we still have a naked puts on U8L. Norwegian here. I was looking to buy it. Today's Wednesday over Monday's high, and the gap yesterday messed them up. Someone's asking about McDonald's 1, 2, 3. Well, your beautiful 1, 2, 3 on McDonald's was right here. There's your inside bar. That was your trigger bar on August 6th. So it's really not a 1, 2, 3 now, but it's a continuation breakout. AEO. AEO 1253. It's up 3 bars, gapping up. It looks like another bottoming type thing. This is retail, but no, weekly's trying to stabilize. Jamia, this one gave beautiful right on this day. I think we bought it in the green room, 720 right there. And then we sold into strength. We did not ride this all the way up, but then you had a bearish retest of that 2-bar reversal. So that's a nasty topping pattern right there. But gapping way down here, there's no pattern. Greg's posting a question. C and JP Morgan. Yeah, the banks have been strong. Yeah, we nailed the entry on a number of things down here. So gapping up to 55. They're not swing trades, but if they negate these red bars and you get a bullish intraday setup, then I'm okay for a day trade. JP Morgan, yeah, it's a bullish 15-minute chart. It's getting far from the 20 now. So, when you nail the entry, they're so much easier. They're so much easier to get on board at the right time. So now it's just much higher risk getting on board now. But like I said, maybe 15-minute high would be okay if the market is strong. Sam is asking about Myrna. Yeah, that's on my gap list here. I got a contract with the government. It's a bullish pre-market chart, gapped up, and the bulls stepped up right there with the bullish engulfing. So, if it holds or moves up and gives you a double bottom, then sure, it could give you a day trade long. Hey, Casey, if you can put your drop down, all panelists and attendees, he's asking me about Bank of America. We were in this one. We got into this on the gap breakout day right here. So that was the no-brainer entry, right? And we sold and we stopped out 30-minute low yesterday. Now there's nothing to do with it. It's too far from the 20. It's at resistance. It's at the 200. It's at its destination. So Casey, absolutely nothing with Bank of America. We traded that perfectly as a swing. Gary's asking about Amazon. Good stuff, thank you. Tell me, Garrett, what's your question on Amazon? I don't know what you're asking. Do you want a call spread? Do you want a put spread? Do you want to day trade long? I mean, nothing's really jumping out at me. And the cues are slowly selling off into the close here. Steve, UAL, naked put. We did the 33s, 33 nakeds. So if you have a bear call credit spread on Amazon, you're in management mode. Yeah, stop yesterday's high and it looks fine. Yeah, we did a 0 DTE call spread last Friday. And then the last 2 days, I was saying it's a call spread candidate. So yeah, it looks good. No, John, we stopped out 30-minute low yesterday, had a nice profit. John's asking about EEFT. It's under yesterday's low. I sold a naked 100 put. I guess that's what John's asking about. I didn't make it official because it was kind of spready. But yeah, I did a 100 put there. Wide range igniting breakout. Let's continue. VIAV. No pattern. Minute to go. 28. Bearish gap. Down here. No pattern. No pattern. Some of these are earnings. No pattern. No pattern. And no volume pre-market. Yeah, well, Kodak had earnings. 1041 gapping up a little bit, but no pattern. We'll come back to you. CBET gapping up to yesterday's high, but you know, so that's a bullish gap. That's a bullish gap, but we'll come back to you. There's the Myrna you all asked about. And I see on the daily, there's a wall of resistance. So there's no price void, as we call it. It's gapping to a wall of resistance, but it's actually what we call a bull island reversal also. Look at it leaving yesterday's little bar candlestick all by his lonesome. So net, yeah, that looks good. Reverse on support. So Myrna, it's a bio, but maybe it's a put spread candidate. XP, this looks fantastic. Gap breakout from multi-week consolidation and an uptrend. I just don't trade in the first 5 minutes, but this looks fantastic. Let me get rid of Tesla here.